Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is a Kickstart video where I take a look at three of the major currency pairs, the Euro versus US dollar, the dollar versus yen, and sterling versus US dollar. Today's date is February 14th, 2024. Happy Valentine's Day and start of Ash Wednesday for Christians around the world. So I hope you have a great day, and let's get started. Taking a look at the Euro versus US dollar. This is the 4-hour chart, and the price yesterday moved below this low swing area that I had earmarked near the 1.0723 level, and it stayed below that level as long as the price can remain below that level, and it has in trading here today. Again, this is a 4-hour chart, so you can imagine, these bars were the have been the range in trading here today. As you can see, the high price fell short of that 1.0723 level, currently trading 1.07102. We did make new lows, but we are falling short of this low right here. So it's not like the market is running to the downside, but it is keeping the most recent break as a ceiling for this currency pair, and that keeps the bears firmly in control. Also implies a 61.8% retracement at 1.0712. Move back above the 1.0723 level today may lead to some further upside momentum on the disappointment of the failed break. That's 1.0741 level will be the next target on the top side. That level was this low right here. It also was this low right here before moving to the upside. So we'll earmark that level as at level 2. Get to and through to increase the bullish buys. And then traders may even look toward the 100-day moving average up here at 1.0783 if it gets ahead of steam under it on the break to the upside. On the downside, get below the 1.06557 level, opens the door for further downside momentum. Let's take a look at the dollar versus yen next. And in trading yesterday, we saw the dollar versus yen move sharply to the upside. Of course, as a review from yesterday, the reason why the dollar was so strong was the CPI data in the U.S. came in a little bit, or came in stronger than expectations, and that helped to push the yields higher, sharply higher, and also helped to push the dollar sharply higher and stocks lower. We are seeing a little bit of a reverse in trade here today. The stocks are higher. I think the Nasdaq index is back about 5,000, which is crazy, but whatever. But what we're seeing in the dollar versus yen is a reversal of that, a little bit of the gains that we saw in trading yesterday. Those gains took the price above this swing area through here near the 1.15071 up to 77 area. Moved up to a high of 87 before rotating back to the downside and closing below that swing level. You can see the number of different times the price traded in that very narrow trading range through here, where there is a number of different swing lows and swing highs through this period, and a period of a few weeks or a month or so of data through here. So getting above that level would be more bullish going forward. Staying below that level, and we could look toward this swing area between 150.03 and 150.11. That would be the next target on the downside to get to and through. If we get below that level, we'll look toward the 38.2% retracement of the last move to the upside. That's this move right here. Will make it easy for the sellers. Just looking at the last move, we'd have to get down to and through the 149.63 level to show that the sellers of the last trend move to the upside, which encompasses 2 weeks of trading, can take back more control. So the buyers still remain in control, but need to get above the 150.75-ish type area to increase that bullish bias in the dollar versus yen. Let's take a look at the sterling versus US dollars, our last currency pair, and a lot of people are familiar with the 126 to 128 area. That is this area right here, defined by the red box, where you had a number of different swing lows and a number of different swing highs up here through here, defining that range. In trading last week, the price fell below that level, came down, tested the 38.2% retracement, actually moved a little bit below that level, but could not sustain the momentum, and then use that level to base and move to the upside. We did in trading this week, move up to test its 200 bar moving average on the 4-hour chart right here. That's a green line on the chart. That was before the CPI data yesterday, and the price fell sharply to the downside, breaking back below that 126 level. Really, the 126 to 126.13 level is the low of this swing area right through here. And you can see that the corrective move in trading here today, where we still right within that area. So the sellers kept in control, and then we had CPI data come out in the UK a little bit weaker than expected. 0.1% or so thereabouts, and we saw the sterling versus US dollar move to the downside and back below this swing area, and the 200-day moving average of 1.2562. You can see that the price is currently trading around 1.2559, which is just below that 200-day moving average, and within this range between the swing area between 125.58 and 125.71. We'll watch this area right through here as resistance. If the price can stay below that level, then the bias remains more to the downside. We still need to get to the 38.2% retracement of this trend move to the upside. That 38.2 comes in at 125.24. Again, last week we moved just a little bit below it before moving back to the upside. So getting below 125.24 is a requirement for the sellers to show that they mean business. And if we get below that level and stay below that level, the 100-day moving average, that's the blue line in the chart, 124.87 would be the next key target to get to and through to prove your love for the downside in the sterling versus US dollar on this Valentine's Day. So there you have it, a look at the some of the major currency pairs as we head into the February 14th trading day. My name is Greg McCloskey. Good fortune at your trading. Bye-bye now.